How's it going, everyone? Welcome to another forecast video for this upcoming week. We're going to be entering March this week and we're almost at the end of February. So I'm going to be covering a few pairs as well as, sort of discussing what has happened in the past week, what we can expect in the upcoming week as, the conflict between Russia and Ukraine progresses forward, and as well as how it's, affecting the markets so far. So let's just dive into the first pair that I'm going to be covering. Let's look at Aussie dollar. So for Aussie dollar, you can see that on the 23rd of February, where things started heating up. This specific pair, all the USD pairs, all here, and NZD/USD had an instant bearish move down because the US dollar basically gained strength. Now, what we've been basically noticing is that for all the pairs there have been a strong impulsive move that stems off a mitigation of a higher time frame zone or a slightly lower time frame zone. So one of the things we've noticed is that the trend on these pairs have changed. However, I would not take these trends into account completely, but we want to look at the overall picture of what the trend looks like. So using Aussie dollar on the daily time frame, we can see that we've been pretty much bearish for quite a while, and we had a break of structure here and we basically failed to make a higher high if we were turning bullish. So at this point, I would say that because the trend sort of moved in the favor of what's going on, I would continue looking for shorts down, and if we do see this specific supply zone here broken through, then we can safely say that, okay, I think it's time to start looking for longs, right? However, from this point to this entry, the supply zone here, we have at least a decent 25 to maybe 50% mark, about 40 pips here. So I would be looking for some longs up to this area and then short it down. Taking longs up would help me mitigate my risk on the short trade that I would be taking here, because if the short trade doesn't work out, this long trade running up to this point would be covering my loss here. So on Aussie dollar, basically for this week, just looking for shorts down, but I would be looking for an intraday play up to that supply zone. So yeah, I mean, for Aussie dollar, not much, because I trade higher time frame mainly. I'm not gonna dive into 15-minute zones and whatnot for the time being, but you could possibly look for some 15-minute intraday plays, mitigation, or just follow the order flow up to where the supply zone is, right? So for Aussie dollar, gonna look for longs up to this zone and then possibly look for shorts. If the shorts fail, then just keep my long running so that I can mitigate my risk and continue where the market is moving. With Euro US dollar, really about the same thing. If you look on the daily time frame, we've been following bearish. We had this low created. We basically had a mitigation here, which we wicked quite a bit, but we did follow through with it. So overall on Euro USD, we are basically just pushing down. So same thing as US AUD USD, you want to continue looking for shorts, and in this case I would be looking at this region here, a very clear sort of short region that we can mark out. So we'd basically look for shorts, and similar to Aussie dollar, we'd look for longs up. If we sort of look at the 1 hour and understand what's going on, we haven't seen any clear sort of bullish order flow form, right? We might have this, right? We might have a mitigation at this point to take long, but we'll see when the market opens and see how the market basically sets up. So with all the USD pairs like Aussie dollar, Euro dollar, GBPUSD, I've got the same sort of bias because most of the pairs have been moving bearish, right? We have this mitigation here, and we basically failed to break this high if we were continuing bullish. So on GBPUSD as well, I have the same bias where I'd be looking for shorts, but up till this point, I'd be looking for longs here, all the way up from here to here. So basically, from all the pairs, I'd just quickly run through the other one, which is NZD/USD. NZD/USD in this case is a little bit different, mainly because this high here has basically followed order flow here, and we've mitigated this point. So you could look for shorts here, but the chances are it may not follow through. So with this pair specifically, although it's tied to USD, I'm going to be a bit more careful, but I definitely want to look for longs because we are following the order flow here. And you can see clear mitigations that are happening at this point, right? You've got a high gradient, high here, mitigation. You're basically following the order flow. If you look at the line graph, you can see we're creating highs, new highs, and new lower highs, sorry, higher lows as we progress up. So that's something to sort of take a note of, right? We want to follow the trend and also follow the order flow that is being created within the markets. So with NZD/USD, same thing. I'm going to mark up this block, this zone here, right? And we could possibly look for shorts from this region. If not, we'll be continuing to look for longs because of the nature of the order flow that has been created on NZD/USD. So looking at GBPJPY, one of our members had asked me to look at her charts, so I'm going to be adding this pair in so that I can explain this in a bit more detail. So on the 4 hour, you can see that I have marked this decisional zone and an extreme zone here. It's mainly because if you look on the 1 hour time frame, this decisional block here is a very, very nice inside bar, which did break the structure point here. So chances are you might see a reaction off of this point and down, but because of how the market is, I will possibly be expecting for something like this, where we have a clear liquidity grab, so a wick, and then you might get a lower time frame mitigation here, possibly on the seconds or the 1 minute, depending on how the market moves. So GBPJPY on the daily time frame, I wouldn't say we are completely bearish, but I wouldn't say we're bullish. Bullish at the same time, because we're sort of in the middle of nowhere. We are in this range. We have not broken through this range. We haven't created new highs. We haven't broken this high as well. So I'll be a bit cautious with how it moves, but on the 4 hour, for the time being, we are looking bearish enough because of this impulsive move. And on all the USD pairs, we're currently in a correction phase where we're going to be pushing back up, either to mitigate or change our bias completely. So that's just something to sort of be aware with how the markets are moving. You might see a lot of people getting taken out on their first initial trade from a mitigation, which is something I've noticed last week, where most of my initial trades were losses, but the next trade that I took were mostly winners. So the behavior I've been seeing last week is that the first mitigation is typically a liquidity grab that grabs liquidity and wicks the higher time frame zone, and then it follows through with the movement to whichever the zone you're looking at, be it supply or demand. There were a lot of big winners for people last week, but for me personally, I did not trade much last week because of the nature of the market. I want to protect my capital, and I don't want to take the risk of trading a market that's volatile and that may not necessarily fit the way the strategy is built. So that's something to be cautious of, guys. You can take full advantage of what's happening, but you have to know when to step back and when your strategy works the best. So looking at Euro GBP, this is an interesting pair I found last week. So Euro GBP is one of those pairs that every now and then you get some nice mitigations and a follow-up. So this was a zone I marked up. You can see we had a clear chalk here, right? A very, very clear chalk. You can see it on the daily and the 8 hours and all the hourly time frames. So this was an interesting pair that, there were longs in this region here, right? There was a mitigation here. Again, it wicked and then it pushed up. So that's a great example for you guys to sort of go back to your charts and have a look at what happened, right? So we have this wick and we had long opportunities in this region over here, where after that wick had occurred. So with Euro GBP, because we're following this order flow and respecting this demand zone, we could possibly see some long opportunities here, right? I wouldn't be looking for any here. If we look on the 1 hour, there might be an extreme zone over here, right? So there are two specific zones. Oh no, this zone's been mitigated, so nope. I'm gonna be only looking at this zone here, which I've marked up clearly on the 4 hour. You might see something on the 2 hour. Got a nice inside bar there. So there is a range within that inside bar, which is highly likely going to be respected. And you can see that we have a supply zone here. Right, I'm gonna mark the end of it, and we did close above it. So I am more than convinced that, you know, this supply zone may have been broken. However, I want to see a candle that does not wick like these ones, because you see how it wicked and is following through again. It's very similar to what happened at this region over here. So I'm going to be cautious with what happens here and possibly look for long opportunities here and shorts to this region here as an intraday play. So moving on to one of the three pairs I trade during the Asian session, we have CAD Yen. CAD Yen has been a little bit messy, but we had a clear mitigation here. So there was a very nice swing trade all the way down to, typically I would target this swing point here. So there was a nice short all the way down, and we have a recovery all the way up. So we had a push down from 23rd Feb, and we're having a correction now. So what you can notice is we have broken this supply zone here, right? And if we sort of look back into what caused that supply zone to break, you can mark a few candles up, right? This is one of the decisional points. This is the extreme point here. So there are two zones you can look at in terms of what's happening, or what points to look at within the market. So that's CAD Yen, really basic. If we break this zone here, even you get an extra confirmation because this zone was mitigated. But however, because we've already broken past this zone, I am more than convinced that it is time to look for longs. So that is CAD Yen. Looking at USDJPY. USDJPY is an interesting pair because just looking at the movement here, you can tell it's been very, very weird the way it's been moving. And full transparency, haven't really traded this pair. There was a trade, I think, a long trade up, but not really looking forward to trading this pair because of the movement. Main reason being, you've got a safe haven pair, which is the yen, and you've got the USD that has been, you know, quite heavily being affected by whatever's happening. Look at this huge impulsive move, and then you're getting a correction down. So this pair is a bit of a mess for me. There might be opportunities, but I'm gonna be personally staying away from it for the time being. So guys, that's basically all I have to cover for this week's forecast on a higher time frame perspective. One more thing I'd like to cover as an additional add-on, as an extra, is if we look at something interesting, right? Let's have a look at gold. It's something for you guys to sort of go and think about. So with gold, is this gold? Let's look at XAUUSD. So with gold, right, I saw a very interesting pattern. If you look at gold and you compare it to the DXY, you'll notice something very bizarre. So if you look at the charts, right, just on a, you know, higher time frame perspective, gold basically moves the opposite of USD, right? Because it's tied. If the USD is weak, gold becomes strong. Now what you might notice is if we look on the 4-hour time frame, there is a point here where gold is weak and so is USD, which makes not a lot of sense because these two are tied to each other in that sense. So this is something interesting for you guys to sort of ponder upon as to what's happening here. Is this clear manipulation in the market, or what exactly is happening, right? So that's an interesting thing I saw last week, and it was something I was just researching and looking into to understand what's going on, right? Because gold is literally following the exact way USD is moving, when in this case it should be moving the complete opposite way. So guys, that is basically it for this week's forecast and an interesting thing I spotted this week. Hope you guys have a wonderful trading week ahead, and happy trading.